BlackRock, which is going to get approved. It's just going to get approved. And it's going to be the only one that gets approved. And maybe after they collect 20, 30 billion, then others will get approved, but they're going to get approved first. That's who they're working with. Coinbase. And that to me says so much that, one, this is coming, right? We've seen very political people do very political things. The problem is, if you're regulating a law or a rule and someone doesn't comply with it, and therefore you violated it, that's kind of what they did with BlockFi and Voyager and those guys. They're like, well, you violated this law, but you didn't say it was a law. You actually said the opposite. You said they weren't securities. Well, but you should have known we were going to change our mind. Oh my God, really? Okay. So that seems destined for failure, which we've seen a number of failures. But what the SEC did here, which is just, and they're just getting smacked every which way from Sunday. If you basically take a bad position against an established law, a judge, unless you can handpick the judge, and like we see in Billions, if you can pay them off and do it, unless you can do that, you're in trouble, because a good, honest, independent judge is going to do their job. And they're going to say, no. And we saw that in the Ripple case. We saw it in this case. We saw it in the Uniswap case. So thankfully, we got some good, honest judges, which they do still exist. But I still believe, right, that the bigger powers that are controlling this particular person who's on this enforcement kick, I still think he's kind of the pawn, the tool, right? He was installed into this position and he's like, okay, now I got to go do these things that they're telling me to do, which is okay. And there's probably some of his own personal stuff in there too. But ultimately, I don't think those powers that be are done fighting. And I think your insight on custody is really, really important, because in the early days, Jay Clayton would get up there on the stage, and he and I actually did a panel on this together. And he would say, it's about market manipulation. We can't approve this because these markets are manipulated. And I was like, wow, you mean more manipulated than the penny stocks and the low float stocks? Like, I don't know if you've been following this VinFast EV company. Oh my God. This is crazy. This is a EV manufacturer from Vietnam. It's 98% owned by this Vietnamese conglomerate, and they floated 2%. This stock has just gone totally parabolic. They haven't, I don't even know if they sold cars yet. They produce scooters, and they sold a bunch of scooters, e-scooters, and they've produced, I think, and that's in air quotes, 11,000 vehicles.
Yeah.
I don't even know if they've actually sold them yet. Maybe they have. I don't know. But this thing has like a $60 billion market cap, Michael. And I know it's bad because my nephew texted me, hey, do you know about this company? I'm like, oh God, stop. No, do not buy it. Run away. Don't short it, because it could double before it goes down 98%, but it's going to go down 98%. So that's where we are. So if you want to talk about market manipulation, just look at your own market. Somebody approved that IPO. That is a US IPO of a total sham. I won't say fraud, but it's a sham. I mean, it's a Ponzi. And there was a company like that in 2000. There was a husband and wife that had a consulting company, and they owned 99%, and they listed 1%. And every day that 1% would turn over like 400 to 500 times in the chat rooms and all this. And they would just sell another 1% every day. And they made billions. And then the stock went to zero because there was no there. And so if that can get approved, why can't this, a spot ETF, a Bitcoin, is about as safe as any spot commodity ETF or mutual fund that we've ever had.
Yeah.
So the fact that we do have world-class companies like Coinbase, that can be. And here's the funny part, right? BlackRock, which is going to get approved. It's just going to get approved. And it's going to be the only one that gets approved. And maybe after they collect 20, 30 billion, then others will get approved, but they're going to get approved first. Guess who they're working with? Coinbase. And that to me says so much that, one, this is coming, right? There's 755 for 756. I'm staking the stake in the ground. This is not going to be the second denial for them. Too much for them to lose to even throw their hat in the ring. They could have just said, y'all have fun. It's an index of money laundering. That's what Larry said, 5 years ago, 6 years ago. So could have just stuck with that. GBTC, right? Big winners this week. The last run, when we went from 10,000 to 60,000 the first time, was all GBTC, right? GBTC got to $20 billion. And the reason the price went up so much is what people forget, the vast majority of Bitcoin is either not movable, right? It's in a multi-sig and there's some problem or whatever, lost or stolen, hodler, I'm not selling for anything, right? And so it's round numbers. Like this is one of those 85% of all statistics are made up on the spot. I'm going to argue 80-ish% is that. And so 20% is kind of the free float. So back in the last cycle, the market cap was a couple $100 billion. So if a couple $100 billion, 10, 20% of that is 40 billion. If you get 10 billion of flow on a $40 billion free float, price is going to go ballistic. And it did. And remember, it was fast. We went from 10 to 60 fast. And, then Elon came out with his tweet and it went down and then it recovered back up to 69 or whatever. And that was the end on the day of the futures. So this time, and I give all credit to Eric, who we were going to have join us today, but Eric Balkunis is a great analyst. And he did the math, right? He tracks the money that's in the kind of RIA and the people who use mutual funds and ETFs. And there's about $30 trillion. Okay. It's a lot of money. So when the ETF is approved, money's coming in, right? Right now, UBS can't do it. Merrill Lynch can't do it. All of these big RIAs can't do it. As soon as that ETF's approved, bang, they'll all have to ascend. So let's say 0.1%, 1%, $30 billion. 30 billion. So today, market cap's around $500 billion. 20% of that's 100 billion. 30 on 100, it's a similar amount, 10 versus 40. I think we go pretty parabolic. Now, we don't have as much leverage this time, so it probably doesn't do a 5x, but a 3x, not even a hard move. But that's 0.1%. If 1%, right? My hashtag get off zero, if you go from 0 to 1%, which is not a lot. And had you done that 5 years ago, your portfolio would have compounded at 200 basis points better. People are going to see that math, and Barry and others are going to put that out there. 1%. That's 300 billion. 300 billion on 100 billion of free float. Katie bar the door, baby. Katie bar the door.